Hello and welcome to another live trading session. Today is Monday, July the 8th, and we're getting ready to put on another trade. So, as usual, we'll take a look at our metrics first and fill up this portion here just to make sure that our metrics are in line, the delta, the buying power, and things like that. And then we'll go ahead and put on another trade, and we'll talk a little bit about this area here and a couple other things. So, to start off, let's check the VIX. 1234, not many changes there. 1234. Our delta is at 89 and then 56, 89 and then 56 for theta. Our Vega is minus 513. And our buying power, and let's take a look here. 15.8, so pretty low. 15.8, and the notional is 1138, and we have 3.3 units at risk. So as you can see, 0.12 is our delta, and this is the delta divided by the net lick. And then our buying power is 15.8, which is pretty low, so no restrictions for us to put on another trade, so we'll go ahead and do just that. And to start off, we check here with a 12 VIX. We are looking at around 13 delta on our naked put, and then in addition, I've been working a little bit on this dynamic PDS, and this is the, let's say, a first draft, a simplified. So it's not as detailed as the naked put. We group it a little bit, and it doesn't have to be as precise. So basically what it is, the higher the VIX, the higher the long delta of the delta of the long put of the PDS. And the reasoning is, and I go a little bit more into detail, but basically what it is with the lower VIX like we have right now, we want to go a little bit lower delta, which we're still staying pretty close to the money because the VIX is down, because the VIX is low. We're still staying relatively close to the money, but we are able to put on a much wider put debit spread, which gives us a little bit more positive Vega and gives us a little bit more protection in case of a sudden pullback or a VIX spikes. And both sudden pullback and the increase like a VIX spike is statistically more likely to happen in a very low VIX environment. It can happen at any time, but statistically it's more likely to happen in a low VIX environment. And then the opposite is also true in a higher VIX environment. We want to push our whole PDS up higher a little bit, which will then help us stay closer to the money, because with a higher VIX will be pushed out anyways. Our strikes are going to be pushed out, so we're going a little bit higher in delta, getting a little bit closer to the money, relatively speaking. And the trade-off is, of course, that our put debit spread will be narrower and will provide less protection. But I think this is probably better for us overall, and we'll test it. We'll start with these numbers. I did some calculations and back tests and things like that to come up with the initial set of numbers, which like everything else, I will be recording that, trading, then recording, and then analyzing again. So we're still spending 20%. Everything is as normal. We're spending 20%, but we're varying the delta, and then just go ahead with whatever expenditure that we allocate for the PDS. And I'll show you right now in practice what that looks like. So with the VIX under 13, we are looking at around 20 delta. And again, it doesn't have to be precise. It can be neighborhood, could be 22, 19, doesn't matter. We'll see what market gives us and what strikes are available and whatnot. So let's just keep in mind that we're looking for 20 on the long put and of the PDS, and then around 13 on the naked side. And as usual, we're looking at around 500, give or take. Could be a little bit less, could be a little bit more, but that allows us to do on average 2 trades per week. So let's go ahead and take a look. MES, we go to trade, and we can go to 130 is too far out, 84 is too short, so 102 is a default for us at the moment. So here we already have 3 at the 12 delta, and then the next one is 14. So I ideally we want to do, we don't want to overlap, but it's not a big deal either. So we can do that as well. But let's just see what we get here with three of them, 408. So if we overlap, we get 460, which is not bad. But let's just see if we go a little bit high. Okay, so if we go slightly higher to 14 delta, you know, the VIX is very close to 12, so it's really pretty low. So I think it's okay to go with a 14 delta and do three of these. So let's go ahead and do that. So, and as usual, we'll probably have to just replace, go down a little bit, boom, boom, and it should close. Okay, 34.50. So remember, if we go 34.50 times 3 and then times 5, it's 517 is what we collected, and then times 0.2 for the total expenditures, 103, and take out the commissions and fees for the whole trade, including naked puts. So roughly around 90 is what we want to spend. Now remember, we said we want to go to let's first go to expiration. That's closer to what we need. So we should either go 73 or 74. Let's just see where we have more room. So if we go here, we could go actually for the 20 delta, and then what we want to do is spend 90 bucks. So let's just see. So this would be 75, and this would be 85, and this is 92, 93. Okay, I think so this would be fine right here. We can do that. Just go a couple bucks over, but have a nice little, what is it, 200 wide. And if we go to, just to double check what happens in the next expiration, 74, where are my trades? Let's see. Right here. So if we go here, we would have to go a little bit higher and then do, let's see, 21. And here we're just slightly shorter, so 54.25 and 52.50, so 175. But I think we can do that. This would be fine. So let's go, because it doesn't really matter one or the other. But there are no other PDSs in this expiration, so we might as well just go ahead and do that. So let's see if we can get this one closed. And we might have to pay up a little bit. So we go here, replace. And by the way, I mentioned in the last video that I'll be doing live streaming as opposed to live Zoom sessions with the Discord members. I will try to do some live streaming so anybody can join, but it's just taking me a little bit longer because it's not as simple as this. I need to figure out how that whole streaming thing works, but it'll be happening in the next week or two. I'll certainly do that. And looks like there is not much liquidity here, so you know what, we're not going to chase it because we have other options. So let's just go ahead and cancel this one, and we go back to trade, and let's go back here, and we had this one available, and then we were doing this for slightly more than $90. So let's see, again, we'll probably have to chase it a little bit. Let's see. All right, so this is filled now. So we'll go ahead and record this. If you find this video useful, please make sure you like it. That helps the channel, and I would appreciate it. And we'll go here. Let's go trade number 80 in MES. Today's date, and then 12:37, I think it was. I'll double check. We did 14 delta on the naked put, and we can open this to double check. 34.50, 34.50, and this was in I'm sorry, 102 days. And once we do this, we'll check our metrics again and see if we need to close anything as well. We'll do that. Oh, I'm sorry, what am I doing? This is strike here. This was a 5200, 34.50, and we did 3 of them. So that's on that. And then we did one PDS, and let's just double check. 53, 50, 51, 50, 53, 50, 51, 50. And this was in 73 days. And we paid 1875, so minus 1875. We did one of them. Oops, and that's it. All right, so everything is recorded. This is trade number 80. So let's just also mark the trade right here. So we do this, we right click and group position, PDS 80, and it's gonna be in the next expiration right here. Right click group position, naked puts 80. Done. And if we take a look now again here and update all of this, delta and data 105.63, 105.63, minus 599, minus 599. Buying power will be higher now. Capital required, we have to refresh it. 17.9, still pretty low. 17.9 and 12.46. We have 3.6 at risk. And all right, so here, if we take a look here, it says that no, we are not underexposed, so we should close something. But let's just see why we're not underexposed. I changed this number, these numbers here a little bit, and the reason is it says that we need minimum 20,000 per naked put. I'm sorry, per unit of risk. But this is somewhat of an arbitrary number that I'm still trying to find out what the correct number is. So let's see if we have anything that's really interesting for closing. So if you go down here, the first one that we have is right here, 73.3, and then we have 67, 68. Okay, so we could close this 73 point something. We might as well do that so that we don't go too far with our little discretionary things. Let's see, we're probably gonna have to replace, give it slightly more. Okay, so this is filled at let's see, 4,800 September 20th, 4,800 September 20th. We go here and we go to 4,800 September 20th. So that's the one right here. No, I'm sorry, this one already closed. So it's gonna be this one here. 3 trades, 4,800 September 20th. And we did that for minus 9 and today's date, and that'll give us a premium capture rate of 73. Now, for right now, this is work in progress, but for right now, if we are underexposed, according to the metrics, we can allow our naked puts to go past the 60% profit target. But at the moment, we are still looking to close them at 80% regardless. So we have extra 20% of premium capture that we can grab in in the market, in the low VIX, and like a bullish market environment. But that's something that I'll be working on and fine tuning. But it's not bad. 73 as opposed to 60 certainly helps edge us a little bit higher, and we're still maintaining a proper balance with the risk and everything else. But that's all I have for today. I will see you all. Let's see when. I will see you on Wednesday, July the 10th, when we're going to be putting on our next trade. Have a fantastic day, and I'll see you Wednesday. Bye.